In this video, we shall see some common mistakes you must avoid when investing in equity mutual funds. Welcome to FINDAS, a place where you can be financially bindas. This is Samir Machwe and I will help you create abundance in your life. If you are new here, I would like to inform you that we are doing this series of videos on common investor mistakes in equity mutual fund investing. Do subscribe to this channel if you want videos related to financial management and similar topics. I have published 5 videos in this series already in the last few weeks. If you have not watched those videos yet, I recommend you do that as soon as possible. I am going to share the links to these videos in the description below. In this video, we shall see why one must not invest in equity mutual funds with a trader's mindset. And let's start right now. Most of us want to invest in the stock market, even though we may have little or no knowledge about it. One of the major reasons most people come to the stock market, especially through the direct investing route, is in the hope of making some quick buck. Unfortunately, most people do not admit this. Hence, we find that lots of people are attracted towards trading in the stock market, which is all about earning short-term profits. Many times, we invest in mutual funds with this same mindset of making short-term money, or what I call the trader's mindset. Now, as an investor, if you have the trader's mindset, your attempts to make money through mutual fund investing are going to fail miserably. Equity mutual fund is not a vehicle to make money in the short term. If you do not have the mindset to invest for a minimum of 6 years or more, I am sorry to say, but equity mutual fund investing is not for you. You must try your luck elsewhere. Let's take a look at a very important aspect of the design of an equity mutual fund. When I put my money in an equity mutual fund, either through SIP or lump sum, the investment decisions are taken by the fund manager and his team who ultimately handle my money. These are educated and qualified people whom the asset management company has appointed to create wealth for their investors. In India, we have more than 20 years of data which tells us that these fund managers have created humongous wealth for the retail investor. So, my job here is to hand over the money to the fund manager and sit tight. I need to have faith in this process of investing. Only then I will be able to make any meaningful wealth out of my money. Unfortunately, most people cannot sit tight. In the beginning of the investment process, the investors demonstrate a certain level of patience. However, if their equity mutual fund does not deliver good returns or delivers below par returns for a long duration of time, suddenly their patience is gone. Most people then start behaving as if they know better than the fund managers and then start taking control of their investment process. First, they start doubting the fund manager's ability. Second, they either change the equity fund or entirely redeem their complete money and park it into some other asset class. This is the kind of reactive thinking, what I call the trader's mindset. This will only lead to erosion of your wealth and loss of opportunity for you. More than 20 years of experience and lot of statistical data tell me that most investors quit their equity mutual fund between the 3rd and the 4th year of their investment. This is that crucial threshold where the erratic decision making replaces long-term investment logic. So if you are in the 3rd or the 4th year of investment in your equity mutual fund and it is not doing well currently, beware. You may be on the verge of quitting. Another statistical data shows that equity mutual funds deliver double-digit returns way above the inflation rate only after the 5th or the 6th year. Now, if one loses patience in the 3rd or 4th year, there is no way he is going to see good money coming his way. Such investors only have to blame themselves. So if you are not having the mindset to stay invested over longer periods of time, there are little chances that you will ever create any meaningful wealth from the equity mutual fund investing. I hope you appreciate that you need a lot of patience to create wealth by investing through equity mutual funds. Having the knowledge of the stock market is not a prerequisite when you invest, but having a long-term mindset and the faith in the investing process is a precondition for you to have your money work hard over the long term. Investing is a mindset and it is not a process. Always remember this and apply it to your life. You will have abundance and wealth beyond your imagination. In the next video, I am going to share with you some very interesting data of more than 20 years. This data will prove to you that equity mutual fund investing is probably the best asset for investing your hard-earned money. Please subscribe to this channel and turn on the notifications so that you do not miss any of our regular updates. I post a video every Sunday on various topics like investing, money management and wealth creation. Do follow us on Facebook, Twitter and Instagram. Check out our website findasconsulting.com to find out more about the services that we provide to create abundance in your life. Thanks for watching and I'll see you next time.